So, this is going to be an hour-long segment where our panel members are going to deep dive into the core customer-related challenges faced by the fintech universe. And the speakers are especially going to lay an emphasis on Indian users. Joining us on the panel today is Nihit Nirmal. Nihit currently heads the product management function for Lending Card, which is one of India's largest digital lending platforms. And he also brings in an extensive experience of over 11 years in product management. Please welcome Nihit Nirmal with a huge round of applause.
Also on the panel, we have Mr. Jonathan Bill. Jonathan is a mobile and internet veteran, having spent over a decade leading Vodafone's mobile internet operations. In 2016, Jonathan started CreditPaid, a digital lender providing secured loans on used motorbikes in India.
Next up, we have Pravin Jadhav. Pravin heads Paytm's investment and wealth management business at Paytm Money. He also brings in an extensive experience in the digital wallet universe. Let us please welcome Pravin.
And once again, the moderator for this session is Ankur Gattani, CEO and co-founder at Frooters.com. A round of applause for all our panelists, guys.
So well, we'll just do a quick round of introductions in terms of the gentlemen here, plus their companies and the stage at which they are at, in terms of, let's say, evolution of maturity of their processes, their business. And then we'll try and go a little deeper into some of their retention topics and use cases. I could happily keep it interactive. If you have questions in between, you could ask. At the same time, we would want to make it slightly more nuanced about the fintech world. At the same time, I'll try and make it slightly more generalized as to how it might apply to an e-commerce or a travel situation. But I'd love to have more insights on the fintech piece, given that we have people from a fairly well-established play within the lending card domain and somebody who's coming from a Paytm kind of background and getting into wealth management now. So very interesting combination of people here. So would love to pick their brains on the nuances of their markets, and we go further from there. Yeah? So all right, so we start with you.
Okay. Hi, everyone. Just to give a brief background in terms of where we started, it was just like a startup. We are hot, just 3 months old, and trying to do some kick-ass stuff, which is looking nice. But the fact is, okay, if you're an entrepreneur in India, and largely in fintech or probably any of the domains, be it travel, etc., the core thing that all of us do is we manage operations. Okay, so we have a very nice UI layer. On top of that, we have awesome onboarding. But what really matters and what goes behind is what are the kind of operational challenges that we manage. And on top of that, we have to manage growth. So you talk to any entrepreneur, you talk to any founder, you talk to any product guy, okay, there's no which side of table do I look today? Do I look at growth or do I look at product? So just to do a quick intro, and while we get started with everyone, I run Paytm's investment and wealth management business, which is called Paytm Money. We started around 3 months back. Within a month of the launch, we were already the largest in India in this domain. So, well, great job from our side, but what really matters is the industry is so small. So the entire wealth management industry, which is mutual fund industry that we are looking at this point of time, in last 50 years, it is just 17 million investors. So for a player like Paytm Money, when we came into it, so our opportunity is that can we grow this market size from 15 million investors to probably around 30 million or 50 million in next 5 to 6 years. So this is what we started with. And obviously, instead of looking at onboarding existing investors who might be investing everywhere else, because the market size was very, very small, our entire product was built on the philosophy of how do we get more first-time investors onto the platform. So I'll just share some stats. We are the largest in India in terms of number of investors, number of investor accounts. We are also the largest SIP generators for almost all the AMCs in this country, all of that in last 3 months. But what really mattered for us in this particular phase of growth is basically how do you create a great set of interest, because normally in the day, you don't want to get up in the morning and say, I want to invest in mutual funds. That is what people like us believe. But the fact that we started, the awareness of mutual funds was extremely high in India, but no one was banking on that, and no one was trying to convert that into making them actually invest. So that's the journey that we will speak about. And we have certain segments that we will touch upon. So we'll touch upon onboarding, managing segmentation, okay, how to retain them, how do you attract investors, how to move them between cohorts. That we will discuss for respective industries, for me from wealth management industry.
Very good. So I am I think I'm the second foreigner after Lizzie. I run a business called CreditMate. CreditMate is trying to solve the quite complex problem of vehicle finance in India. I'm sure this is Bangalore, so everybody probably drives either a car or a two-wheeler. The two-wheeler industry in India is the world's largest, growing at about 10% a year. The car market is now the fourth largest in the world. Two big drivers of that business. One is the coming of age of used vehicles. And the second thing is just the freedom and actually affordability of two-wheelers. To give you a sense of the industry, 20 million new bikes sold last year, around 10 million used bikes, around 4 million cars sold last year in India, around 8 million used cars sold in India. Total value of that industry is about $50 billion. Total penetration of lending in that industry is at around 20%, 25% on a good day. Reason that penetration is so low is that the process of onboarding a customer is highly complex. Most of the finance that is currently available in the market today is sold at channel in dealerships. That requires a whole bunch of complex processes that relate to underwriting the loan. It's a secured loan, so you're also dealing with the asset, the valuation of the asset, the hypothecation of the asset to the NBFC. And in addition, you're really dealing with customer segments that are new to credit and oftentimes largely offline. So we are probably at the other end of the spectrum to a lot of your businesses. But a lot of the processes, and particularly the marriage of online discovery through to credit scoring, through to loan dispersal, and then subsequently collection, is a marriage between some online process, some borrowings of great growth hacks and CRM type capabilities, as well as where that meets the ground in terms of physical interaction with customers. So we'll get into that.
Hello everyone, this is Nihit. I represent Lending Cart and I head product and growth for Lending Cart. What we do as an organization is that we are solving the problem of working capital loan for small and medium enterprises. The reason that that's an important problem to solve is whatever way you do the math, you'll realize that it's at least a $50 billion opportunity, which is extremely suboptimally served or not served at all. Another way to look at it is that if you compare with developed economies, you'll have the kind of banking coverage that we have is less than like 5 to 7% of number of banks, number of branches exist for some of these people. So that's the two main reasons why we felt that's an important problem to solve. And if you go slightly more macro, you'll realize that because the SMEs are the backbone of GDP, and if you look at the fact that while they employ 45% of the total employment, but they only contribute to 10% of the total GDP, it reflects such poor usage of such a vast potential of SMEs. So that's why we felt that we should kind of solve this problem. And as Praveen mentioned and John mentioned as well, that it's a huge a customer has to go through a lot of hoops when he goes elsewhere. And a beauty of what we have tried to do is we said that there's a huge latent demand that exists. The fact that it has translated into we being extremely profitable, as in we can make money per transactions. And the only problem that we need to solve is how can we make things more convenient and fast for some of these people. So that's the reason why we do this, and we have been doing this for the last 4 years now. Our book size is around 1,000 crores. We probably be India's largest alternative lending company. And yeah, that's where we are.
So pretty amazing the way this whole India to Bharat transition seems to be happening, because all the three companies here are seeing the big massive opportunity in this first to mutual funds, first to credit, again first to credit at an SME level kind of use case. So what I'd love to touch upon further on this topic is to really see how the onboarding journey of these guys, given that they're new to this world, how do you really look at designing this for the most effective impact? Because there's this whole pre-sale aspect before the person has made this transaction. And then how do you really design that journey very well from the first interaction to the point when he's made his first transaction?
Okay. So again, I think a lot of, at least what I'm going to say will be prefaced with the context, because without that context, a lot of this might not make sense. So for us, what's happening is that, as I mentioned, there's a lot of latent need that exists. There's a lot of inherent demand that a customer has with us. So we don't have the problem of how do we grow and do new user acquisition. So a large part of a challenge is that how do you find a user in that, you find a needle in the haystack where you can acquire a user profitably. And a lot of our effort therefore goes in figuring out that which kind of users are viable for us. And from that standpoint, so for example, as I mentioned, right, we do a lot of our value proposition is speed and convenience. And if you look at the other side, where the user comes from, any user who is high quality user will have to have high intent and ability to apply for a loan. So my job is to figure out in the onboarding journey via implicit and explicit data, how can I quantify and qualify what quality means, and which comes from intent, which is like, is he actually applying for a loan or is he just window shopping? Because in the pecking order of how brands stand, he'll probably go to a bank more than NBFC, more than us. And that's where he will kind of go to. That intent is very critical. And second is his ability to apply for a loan, ability to furnish documents and things like that. So that's where we focus up a lot of our energy to build the onboarding journey and pick the users where the high intent, high ability users are useful for us, and everything else we kind of put in an auto mode.
Could you quickly touch a little bit upon the signals that you read and how you translate them into the variables that you're talking about? Because it has to translate into some data-driven kind of an action, right?
So, I mean, there can be a lot of double clicks here, but one of the very basic things is that, and this may sound very trivial, but we just ended up asking people that how quickly do you want a loan and how much loan do you want? And 50% people who would say we want a loan as soon as possible, out of that 30% people convert. So very simple things in terms of, are you clearer about where you want to stand? Or for example, because we need bank statements, one of the proxies is that, do you have a net banking account and how actively do you use it? That becomes a proxy of intent in terms of, ability, where you can relatively easily access a bank statement which we need for credit assessment. So some of those things we are able to figure out across intent, ability, and there are a lot of other details which has allowed us to, so for example, a high intent, high ability user is converting 4 times than a low intent, low ability user. And that's the kind of conversion we have been able to drive because by focusing on some of these things.
Awesome. So I think Jonathan can take this next. I would probably love to hear more also about the aspect that when you increase the number of questions in the funnel, does it also possibly complicate and cause drop-offs? Because the way you want to build more and more intelligence before you get to the transaction, it'll hurt the funnel somewhere. So what do you think about that?
So we have 2 models really of going to market. One is that we have built point of sale tech that allows any dealer to onboard a customer. And then we have an online channel, okay? In the online channel, at the dealer channel, what you're really doing is fulfilling a demand which is there and then, yeah? Which is, I want to buy a bike and I want to get a loan to buy that bike. So that is really all about, your intent is kind of pretty much guaranteed. What you're really doing then is competing potentially with other lenders who are in the channel, and you are trying to onboard that customer and give them a decision as quickly as possible. So I will leave that to one side, I think. On the online channel, what you're doing is you're seeking to attach someone to credit before they've actually chosen the vehicle. And that's a very different story. I guess it's a bit like Nihit's business, which is oftentimes people are borrowing money to do something with that money. In our case, what we do is we try to keep the questionnaire as light as possible. I mean, honestly, you could build a fintech tomorrow in this country by just doing a Google questionnaire and dressing it up nicely, which was prevalent in 2015, 2016. Fortunately, now that's moved to actually, can you underwrite that person in the online process? If you can do that, then you're light years ahead. Yeah, the only other company I think that's really effectively done that, it may well be Lending Cart, but in the consumer side is Zest, who we've seen. In our case, we are able to, in effect, issue a demand draft for that customer before they arrive in channel in about 45% of cases. In the rest of the cases, then there's further due diligence required. So what you're really doing is you're saying, on the basis of my credit engine and my scoring and my propensity model, propensity, what I mean is how likely is this customer to repay based on either his existing circumstances or his existing repayments if he has a loan. 50% of our customers have no loan historically, so we don't have that insight. You're really wrapping that up into a customized journey through that process. That is where ultimately all of us, including, I think, PJ, are operating in a regulated market, which is a very important point. So I would argue, probably everyone else in the room is semi-regulated, if not regulated.
At least from a communications perspective, most people in travel and e-commerce have a free hand.
Yeah. So we, on the other hand, have to, at the end of the day, you have to have a contract, a loan agreement, you have to have KYC documentation, you have to have an application form, you have to have all sorts of due diligence. That is if you're your own NBFC or if you're working as a platform like we are for other NBFCs. So there is that journey is quite complex. It can lead to substantial drop-offs. Intent, I think what you're saying, Nihit, is that finance is underserved. If you can do finance well and in a friendly and easy, intuitive way, then you don't have a problem. The problem is, and what you're really competing with, is a decades-old and archaic industry that's using paper and processes to do that. So that's really what your challenge is, not the onboarding so much as the processing. And I think that's what PJ was referring to when he said the operations piece below his front end.
Sure. So what's your view on this whole pre-transaction onboarding?
Okay. So I will just tell a brief story. So when we started, and we started with the aim that we will build the largest wealth management company in India. And when we're doing our own market research or talking to folks in the industry, what we got to know is that the cost of acquiring a customer online was roughly around $1,500. Okay, where you have to spend money on the Google and Facebook toll tax, and then get the customer onboarded, and then after that you have to do is the KYC, and then get him started, and after spending like $1,500, the guy is going to invest 100 rupees. Okay, so that's truly not.
Or buy a cheap pair of shoes for e-commerce folks. Yeah, that happens.
Yeah, so that is one thing. And then when we spoke to AMCs, like the industry that we cater to, they're saying, people invest nahi karenge, matlab nahi karte invest, humne online try karke rakha, etc. So there was a challenge for us because now we're forming a team, we're getting team on board, we're very excited about building this, we have made a commitment, we're going to be the largest, and now when you hear these things, what do you do? So we took a other approach. We said, no, while we're building the product, why don't we create enough interest by talking about Paytm is coming into mutual funds, and we just put up a landing page, and like development cycles, they keep on extending. You're expecting something to roll out this week, and that doesn't come this week, it goes to next week. So we fairly got some amount of time, about 4 or 5 months, in which that page was there, okay, and we tried to create enough buzz about Paytm getting into this particular domain, and till the time we launched, we had around 8.5 lakh people who have registered and verified registered interests for investing in mutual funds. So if you look at what was happening, and I'm sure all of you throughout the year must have seen those awesome campaigns about mutual funds sahi hai. So a lot of awareness was already created by the industry. So we just came and we banked up on that and said, mutual fund sahi hai, Paytm ke saath available hai karke. And then we just put that one landing page where people kept on putting their interest. So now the same page, and the number is live on our website, is the real-time number. Okay, we have now 1.5 million people who have registered on Paytm Money for investing in mutual funds. So $0 spent, we not even spend, 0 rupees spent, we not even spend a single rupee till date on any marketing activity. So our approach was, who's going to spend this 1,500 rupees, get a customer, and they acquire, and they invest 100 rupees and next month redeem karke jayega. So there is no way to retain that customer. Okay, so we took the other approach. We created a massive pool of people who are going to be interested in mutual funds. And on a daily basis, we approve around 10,000 KYCs. We do around 10,000 KYCs. So our funnel is still there. Okay, so then our problem started a different side, because when we were looking at onboarding, when we were looking at onboarding customers, our journey was how do we make it the smoothest possible journey. So none of the people who are built Paytm Money are from the industry, not a single person. So what we did is basically we went to all the competition, we went to all the broking websites, we went to all the AMC websites, all the complaints that have happened in the entire industry for the last 2 years, we read all of them. Okay, and we figured out what is the pain point in onboarding. And we made such a simple onboarding flow. You come and put your PAN card number. If you're an existing mutual fund investor, you just have to go and verify your bank account, which happens electronically. And if you're an existing investor in mutual funds, you actually end up investing in like 3 minutes. Okay, right from putting your PAN card to getting your KYC done and verifying you everything, and with super compliant regulation. By the way, we are heavily regulated, if you guys don't know about that. Okay, and to get it done. And if you're a new investor, your onboarding process typically takes around 10 minutes. Okay, because you have to check, we have to verify all of that data, when it goes, etc. There are some rejections, and there's a lot of first-time investors, okay, and they will end up doing a lot of mistakes, okay, and you have to go and correct and handhold them. Like, for example, if you're asking them to put a checkbook, okay, they'll put a very old checkbook which doesn't have an IFSC code, and you can't approve that, okay. I'm sure people who are regulated will understand how important it is to this kind of data. So our onboarding process is very simple then. Okay, we created a pool of users who are always going to be on top of the funnel. And every day we'll do 10,000 KYCs. And our industry folks told us, people KYC nahi karte itna, you don't have to invest so much in that. So when we started with KYC, we had a very small team of around 6 people. So we thought, ye chal jayega, people will come, they will approve, etc. But on the first day when we opened up the platform, within the first hour itself, we had roughly around 3,000 investors, okay, who were approved and started investing. Now with that, okay, the kind of onboarding that we were doing, people were waiting on KYC list and waiting for getting the documents approved for around 7 to 8 days. Okay, this is when we started, and all the ratings on Paytm Paytm Money app, in spite of such a great user experience, where like no KYC nahi ho raha hai, negative rating, 1 star, 2 star, 1 star, KYC not done, KYC not done. So that was really disheartening. But then we looked up what we can do, and we figured out we have to get KYC done. So today, as we speak, our 60% of KYC is done, even for a new user, first-time user, with all the documents that he has to fill, like your IPV, your signature, your bank cancel check in case your electronic verification is failing. 60% of people start investing within 30 minutes. So that's the kind of flow that we're super optimized for. And in terms of investments, okay, we didn't, like I said, mutual fund sahi hai, to sabko pata sahi hai. You just figure out, no, this is the best platform for you to invest. That's our approach.
So it's actually quite different compared to what the rest of the world sees, because for all three of you, somewhere the consumer's intent / demand / need is not a problem area. I mean, there are enough people wanting your stuff, and they're like waiting in queues and waiting because the other solution they have is pretty messy. Now, while on the other side, the world in e-commerce would probably be very different because you have 20 places to buy shoes from. So, you know, the first transaction probably ends up being a little bit easier from there. But the moment you start looking at consumers' behavior in your platform and the transaction, let's say, flows in a certain fashion, there is all this conversation around propensity modeling. Now, I would relate this to e-commerce in a fashion because when we were at Jabong and we saw that the first transaction value, the number of items you bought and the categories of items you bought has a very direct, clear implication on your LTV. And this is what we figured from our modeling. So I'm very curious to understand what kind of modeling, you know, at a surface level, if you can tell us, have you guys implemented and how that affects your subsequent strategy for that customer, because I'm sure you develop personas and segments and, you know, define unique journeys for each of these guys. So if we could touch upon some of these use cases and journeys, that would be very interesting.
So I think that's absolutely right. I mean, no lender, at least I can only speak about lenders, are particularly interested in lending one time. Yeah. So the lifetime value of a relationship that you've built up enhances over time if you increase lending. The way that you can increase, because ultimately the fundamental difference between us and e-commerce is that we don't get paid until until later. So really, that propensity modeling and that that kind of how do we develop a relationship with a customer depends. It takes two paths. So a great customer from a lending perspective is one that onboards easily, pays on time, and then wants to extend his relationship or her relationship with you.
So I'd love to know if what kind of data signals are you picking up, and what is the score that ends up giving that answer, right? I mean, so nothing proprietary, of course.
Broadly speaking, there's two types of score that you can have. You can build on top of an agency score. In our case, as I say, 50% have no agency score. Agency scores are advantageous because although they give you an absolute number, actually the report that you get back on a customer will give you his or her repayment history, how many late payments, how many on-time payments, and other things. You can extrapolate then intent and on-time payments. It's in the consumer credit industry in India, certainly in mass market, you're also dealing with the hard truth that 10 to 15% of every EMI collection cycle bounces. Okay, when I was in the UK, if I was running a mortgage company or a home loan company and I had a 15% bounce rate, I would be in serious, serious trouble. So a lot of the time you're also trying to change people's behavior through coaching and through adaptation. We are not a post-pay society. Yeah, most people in India pay on demand on a sachet basis. Nobody's on post-pay, maybe a few people in this room, but the vast majority are not. People pay their recharge on their phone or they pay their Sky TV subscription on demand. Nobody is used to regular repeat payments. Even if I borrow money informally from my uncle who lives in the village, then I don't pay him back religiously 1/25 of that loan every month. I pay him back in one go when I've got the money. So actually that relationship development and teaching people and helping and coaching them to learn regular repayments in our case is a fundamental part of what we do. It's much more important than the basic onboarding.
Sure.
Right, so there are multiple questions or more parts of what you've asked. So first, in terms of propensity model, and I think what you're talking about is credit assessment and not propensity can probably mean
There's a lot of things, sure.
Correct,
so in some ways it could be credit, it could be more how likely is it going to repeat, for instance.
So that's
right?
assessment
Sure.
again. How do you? So at least for our context, a risk is three parts. One is intent risk that you don't even want to give money back to us. Second is mortality risk. And third is business risk, that your business could not survive enough or thrive enough for you to give money back to us. So what we have done, if you look at the product design, is that the fact that our loan is 9 to 12 months, that reduces the mortality risk dramatically, just kind of by virtue of product design. With intent, what happens is that, I mean, there are models where we give certain, so for example, as the amount increases, your intent or your likelihood to not pay the loan back goes up dramatically. So we, by consciously design, we're just doing 10 lakh rupees worth of loans. So for a given revenue, we will not go beyond 10 lakhs.
And the threshold that you're naming here, the 10 lakh number, is an outcome of some data.
It's a function of
modeling.
revenue. We will come to that. We will come to that. It's a function of revenue. And third is business risk. And business risk would mean that what has been your revenue over last 12 months, what is your cash convertible cycles, and how is there any seasonality in your data. So these three things allows us to kind of look at your ability to pay us money back over next few months. So that's the first part of the assessment. Second is that some of these people are not very adept to forecast how much money would they need every 10 to 12 months. So what we do actively is build that relationship with them while they are repaying their loans in order to forecast their projections for them. And that's where we kind of come in, and we do a lot, which does two things for us, which allows us to monitor their loans also in real time, and ability to project their demands before that they can realize. And that kind of helps us to substantially reduce our risk over time.
But this is a pretty high-touch affair you're talking about, this whole building relationship piece. Is this manual or fully automated?
No. So what, the third part, right? So in terms of understanding of needs, I just need their bank statements and bureau data. That's it. I don't need to talk to. Yeah. Just whatever goes into my first assessment.
The moment you use the word relationship, it starts to feel that okay, there is a interaction that's happening.
No. So it's just that how do you automatically keep a view on that in terms of monitoring your loan and figuring out the projection? I think you're sorted.
So I think for an e-commerce player, this would pretty much translate into how is he buying frequency across categories, across and all of that. Because at the end of the year, you might be in a stronger position to say that, okay, this is likely to be a loyal customer and make more transactions, vis-a-vis somebody who's going to churn off, because somebody who's just bought his first pair of shoes and a cheap one in e-commerce may not necessarily do another transaction for a long time. So, I mean, the insights are fairly handy on the generic world as well. Praveen?
So for, unlike most of the marketing that I had done earlier or for e-commerce or other, it's a different story altogether, because when we were doing marketing earlier, let's say for e-commerce or travel, etc., you could always go and tell the investor, like, no, you buy this today. Okay, this is an iPhone, this is a great sale. Unfortunately for the industry that I am, we can't tell people, do you invest in this thing, or you invest now, or you invest without reading, etc. So our communication to users is never about invest. We generally don't want to do that, because that might lead to some mis-selling or some of the things that we should be very careful about. So we are in a situation where we're supposed to grow the industry. We're not supposed to talk about where do you invest or which product do you invest. So what we try to do is basically we try to construct journeys for users and try to say, where are these people? So obviously from onboarding to, let's say, invested stage, there are multiple journeys out here. One of them is basically you might get stuck in your KYC or some document is pending. So we try to tell, you put this document, you'll get approval in next 30 minutes or next 15 minutes. So that's one thing that we try to do. Second thing, when the user has an account, okay, we definitely know if the user has invested before or not invested before. So people who are smart investors who know, I am okay with this particular investment scheme or this particular AMC, he will happily go search and do an investment. The people who are first-time investors, they will wait, okay, they will keep on waiting, and unfortunately, we can't push them that you come and invest in this particular scheme. So what we try to do is we try to communicate them about features that are there on the product that you can discover mutual funds by rating. You can get to know about the AMC, you get to know about the fund managers, you get to know how these AMCs are moving up, what's the return. So those are things that we talk about. But largely, even because this is the first time investors who are coming onto the platform, we have seen enough behavior that people will invest 100 rupees and they will wait for 2 days and redeem it. So just to check, is the product working? यहाँ पे पैसा अंदर जाता है, but बाहर भी आता है. Okay, so that's the kind of trust that we need to build upon. So what we have done, we picked up on this, and when the user is investing on Paytm Money, for every transaction we show full trackability and traceability. Where your money is it with us, is it with the payment gateway, is it with the mutual fund company, has the units been allocated, is it been confirmed, is it in your portfolio? So that's the level of trust we try to build, because our journey is more about helping people understand your money is safe, and this is the first time that you're not putting your money in bank. You're always putting money in the bank. The first time this is not in a bank, so you want to basically make sure it is safe, it is secure, it is in the hand of the right fund manager. That's the kind of journey we try to build. And obviously there are more insights because it's a new platform. Okay, we also keep on learning more about a thing. So few things that we end up learning is that people who do their risk assessment,
they are more likely to invest. In fact, they are 60% more likely to invest compared to people who don't, because on our product, we have features where you compare users' risk with the fund's risk. So that's the journey that we are trying to build. So unlike other products or other verticals where you can go and tell the person, this is where you go and buy this particular product, or this is iPhone for you, this is Samsung for you, this is MI for you. We can't do that. So our journey is about building trust, making people aware about the product, about investor education, about things that they can do on the platform, and how easy it is to get in or to get out whenever you want.
Fair. So I think trust is an amazing topic where probably you guys could also touch as to, given that the people are mistrustful by their habit, there are all of these different kind of trust elements that people in the travel world use. You would see a Booking.com having a bunch of these pop-ups. This hotel was booked N times. People from your city booked it. So is there a structured, let's say, strategy and trust elements that you try and use in your first-time customer journey, or even the early days of your customer on your platform, that enables this to be a relatively smoother transaction? You know, so having that VeriSign logo was considered to be one of them. Now we've obviously gotten much farther than that. So what are these trust elements that you think are working for you?
Got it. So there are a lot of trust. I just talk about one that's kind of particular to lending business. So a lot of times people ask me that now that you're giving money, why do you need to build that trust? Because somebody's taking money from you. But the matter of fact is that the moment that user signs an agreement with us, that's where a lot of confusion comes in. That what am I signing? How am I? Is this trustworthy and things like that. So while there, as I mentioned, there are a lot of other aspects. The aspect that's very critical was that how do you make the agreement process as simple as possible? So we have spent a lot of time to make sure there's no jargons in the agreement. It's probably the shortest agreement that you will find across the platforms. It's very easy to fill that agreement, and that was a nuance that we figured out over time. That while you can build that trust on onboarding, and because we don't have a demand problem, I mean, you probably can get away with some of those things. But the larger problem was that once he's doing something where it definitely needs a lot of trust, how can you solve that problem? And making that agreement in local languages and some of those things have really helped us a lot.
Awesome.
So I have a slightly contrarian view on the whole India is a low trust society. I think that it's segmented trust. I think that certainly we are lending. So one of the objections that I always had when we were starting this business, when I explained that we'd be lending to new to credit customers on used motorbikes, was how the hell are you going to get your money back, right? So and one of the benefits of being some weird foreign guy is that I'm not pre-encumbered with this sort of assumption that I can't trust anyone, okay? What I have found out is the people I can't trust are the 1%, and I can absolutely trust the 99%. So just wanted to make that point. But from a lending perspective, we are inherently, it's kind of more us trusting our customers, if we're honest, yeah? And that's a two-way relationship. One thing that I think, whilst onboarding and getting somebody on board should be as smooth as possible, in the end, one thing that we found is if you physically sit across from somebody at the end of the day and sign a contract with wet ink, and you sit across that person, whether it's you or your agent or your dealer, then that improves your relationship no end. I am not 100% convinced that trust can be earned in lending just by a completely online process. For a secured loan and for a fairly large ticket size loan, I still think there's some, in the end, you need some kind of touch of some sort.
So well, just to kind of defend my point about low trust, the big spike in e-commerce in India came when people were allowed to open their packets and return them if they didn't like it. Because when you want to buy online, the least you really want to be sure of, is this going to be the right thing, it'll come at the right quality, right time, and all of that, and then you'll pay the money. So COD really spiked the whole thing. So now, of course, Jabong is better trusted than a whole bunch of new platforms that are coming in. But even despite being a mature user, some people will still order the first order as a COD. They'll open the packet, check for quality, and then pay the money. So it's in the context of that, I'd say that, new things take their own time to earn that trust. But the physical touch part of it, when you say that there's a face-to-face interaction, now that's not really super scalable, or is it, in your model?
Well, so as PJ will tell you, that nearly all of the small investors that are in India today, people want, if you're dealing with mass market consumers, and many people have lamented the fact that there aren't more than 20 million, I disagree with that, true online customers. By the way, if there's only 20 million true online customers, how the hell do half the smartphones in the country get sold online, as a point? But most people, they may discover online, but they still want some physical thing to get hold of where money is concerned. Okay? I don't think anybody does a transaction in finance anywhere in India today where, or at least in the 99%, where there is no physical meeting of some sort. In fact, I don't think that's possible.
Is that how LendingCard is operating?
So yeah, till now we haven't had person, but there's no field investigation that happens. We don't send somebody to do an agreement signature and things like that. So there are some telecallers who will talk to these people, but largely we have kind of stayed away. So now we are realizing some of those challenges, but till now, whatever book size we have had is without any.
But that's why you're changing from being a bank to being an online play, right? Because the cost, if you start investing in getting the physical transactions, it might just become too expensive as well.
It depends on who's doing the physical transaction. So to give you a sense, in India today, collection and DSA market for onboarding customers would be employers of probably aggregate around 5% of the economy, I would imagine, in terms of employment. Those people are, even your own experience, when you want to open a bank account today, you may have an office boy or somebody that's going to fill in that form for you, but there is some guy at the back end that's running around doing stuff. So whilst I absolutely believe that online can be a mass market experience in finance, as some of my colleagues are proving, that is still a segment of customers that is not big enough and growing fast enough for it to allow you to grow your business fast enough.
Sure. I think
just on that point, I think that's a debate that we continuously have. It's not that we have kind of believed that this will
so I was going to extend this there as well, because now you see a bunch of these big e-commerce guys getting into offline stores because the next wave of customers is supposed to touch the brand the first time offline, right? I think that's big on travel. You have franchise businesses and you have offline stores even for the likes of Make My Trip. And I thought even Myntra did dabble into some of these offline stores. So this whole O2O story, as they call it, this whole synchronization of communication between an online interaction and an offline interaction, getting into the same backend data. Is this something that you guys, I mean, in your case, you're not doing anything offline yet, but is that something that's...
There is offline, it's just that it's not physical. I mean, there is a telecaller who's talking to someone, so that's, I mean,
but,
technically...
how does the data come into the stream of the same story, right? Because there's an interaction that has happened. There's some amount of data that's collected. Right. Now, that's hard data which could be plugged into the system and then also become useful for the rest of the conversation. Right. So how do you structure that? And that would be true for all of you, I would assume.
I mean, one fun thing that we do is on collections. So some of the loans that we disperse, our NBFC partners or people on our platform will do what are called field investigation, which is basically, when I used to work in telecoms, we used to call that a welcome visit. But really that's to check that you exist and you live there and you can afford the electricity to turn the lights on. That field investigation data is actually really interesting data because it's physically collected data. It may have a photo of where you live, where you work, description of who you are and who your friends are. If you ever have to go and collect, then having that in your agent app is really, really valuable. Sure. So I firmly believe that the job of kind of engagement, retention is kind of a fact of life when you're a loan company. Yeah, you sign someone up, you're legally wed. Okay, so retention is not an issue. It's how you manage that relationship using clever online, offline.
That to me would open up this huge topic. I mean, you have all of these delivery boys who are out in the field and meeting customers and doing some kind of interaction. And if Vodafone could see value in if that guy lived in a certain fancy apartment and all of that, I wonder if anybody here has experimented with any data collection at the delivery boy level where he's out there in the field. He knows, let's say, what kind of apartment it is. Is it a fancy apartment, not so fancy apartment? Because that kind of data could also get plugged into your CRM systems to understand what the customer profile is really like, right?
I think it's a brilliant idea. Has anyone done that?
So, I think given that we'd be out of time fairly shortly, I'll quickly, I think, try and summarize some of these actions, and maybe we can just take one more topic around the NPS. This whole Net Promoter Score topic, which we did discuss prior on the call, that if I like the product, I'm going to tell it to 10 people. Do you see that as a big stream of action for you guys, and do you engineer it in some fashion?
I don't want to monopolize this panel, but so NPS for us, we have two customers really. We have dealers who we enable with finance, and we have our end customers. We measure both. All of our growth in terms of dealers has been driven by recommendation from our dealers to new dealers. So our NPS
is that engineered in some fashion? Is there an incentive to this?
There is no incentive for that at the moment.
So it's just the compelling proposition.
We are woefully inadequate at things like incentive and stuff like that. Sure. But word of mouth, so again, to talk about trust, small and medium.
Would you do it if you could?
I'd love to do that. That'd be great.
Sure.
But just to touch briefly on, we're dealing with very small businesses, dealers. They do not trust quickly, okay, especially startups. So a lot of startups have played in our space in the past, incentivized behaviors, thrown cash at them, all this kind of stuff, then they disappear. So if you're a finance institution, half your job is to stick around for long enough that dealers and small businesses trust you enough to work with you.
Awesome.
So the NPS has just actually two parts. So the core question in terms of would you refer a particular product to someone else does not exist for us, because referral by virtue of SME lending does not exist. SMEs don't want to talk out that.
They don't tell the world
So
that
we
they're
have
lending.
kind of morphed that into something. It's around CSAT. It's just it's a NPS look-alike, and we're actually capturing
Sure.
CSAT. So that's one. And second, I mean, a lot of our interactions happen on IVR as well. So we see a lot of people giving that information on IVR, but on an IVR you can't do a standard 10-point scale. So you have to figure out a way where you can probably do a 5-point scale and still map it to email, SMS.
Sure.
But that's something that we definitely focus on, and we've realized that our NPS and time to the whole TAT is extremely correlated, which kind of goes back to very strongly with the conversion funnel. So that is something we are investing heavily, and yeah, so that's where we are.
Make it simple, people will do more of it and they'll stick around as well, is what your
Yeah,
point
yeah.
is. Sure.
So my take on
We
NPS.
anyway never had a demand problem to start with, so.
So my take on NPS is a bit different. We don't do NPS to scaling model as such, but when you're doing e-commerce or when you're doing, let's say, mutual fund investments, okay, if you're doing e-commerce, I think the truest form of retention is the second order from the same customer. Similarly for us, when it comes to mutual funds, what really matters is this person actually adding his second transaction on Paytm Money as well. So if you're doing an SIP, is he actually giving a second SIP to you? Or if he's investing in first fund, is he actually doing a second fund? And we see people writing to us and saying that, oh, my KYC was done in like 30 minutes, my brother's KYC is still waiting, can you help us? So that's a good factor for us, because we get to know that people are talking about a product they are recommending. But I think everything that we're speaking about, NPS, retention, is at the matter of trust. And when John mentioned that 99% people you can trust and 1% you can't, I think that 1% is referring to his mutual fund industry. and the reason I'll tell you, it's so funny today that you do any online transaction today, any online transaction, be it travel or be it e-commerce or be it recharge or be it a loan or insurance, anything, you get the confirmation the same time. Okay, like if you're buying an insurance policy, typically it takes probably 2 to 3 minutes now to get your insurance policy. In mutual funds, no, what happens is you make an investment and then you get a confirmation after T plus 2 days. Okay, and if you know what that means, and unfortunately, if there is an exchange holiday or trading holiday which falls on Friday, basically any investments are done on Thursday. Okay, Friday, Saturday, Sunday, Monday, Tuesday, go confirmation hota hai. Okay, so now the question about trust is, no, where did my money go? Like everywhere I'm transacting today, when I'm an online customer, okay, be it a travel or be it a recharge, anything, I get instant confirmation. And where does my money stay for like this 5 days, which are in between? So that's the kind of challenge that we try to solve. So when we see our behavior of users, people invest and then withdraw, this works, I can invest once again. So these are all things which have to be built in a journey, and these are more learnings that you'll get as and when your customers on your platform will mature and will understand, and probably I hope the industry understands that and they're able to give instant allocation of mutual funds very soon. And if that happens, that will be
Nearly the
great.
same thing as the COD story, right? I mean, the first time I get it, I want to make sure it's working fine, and then I would do it again.
Correct.
So make sure the first transactions are optimized. You had something to say.
Yeah, just the point on NPS. So, for example, our next loan will happen 9 to 12 months later. So, for example, it's very important for us to be able to predict who will come back to us and who will not. So, NPS has become a very strong leading indicator for us to kind of look into the fact that where do we need to kind of work harder, or where we can kind of depend upon some of the transactions. So that's why it is very useful, and we're trying to build models where even if you don't give your NPS, can I correlate to things that happened in my system and say what a potential NPS could have been for a user who didn't get back to us, because I have to get back to him before before he goes to someone else, and that's where it becomes very important
So
for
I think
us.
NPS is a criteria. I mean, the data collection ends up being limited. You'll have ultimately 5% of the people who have responded on that question and given a score. But if you start to use other variables and make that as a proxy, maybe that'll end up being a useful parameter for your customer segmentation. So that's all for us for now.
Thank you so much, all the speakers. Can we have Swati for the felicitation? Big round of applause for all our speakers.